Very good afternoon to all of you. On behalf of Committee for Members in Practice of Institute of Chartered Accountant of India, I welcome you all in today's VCM on audit documentation during pandemic and critical analysis of arrest provisions under GST. Dear members, both the topics are very relevant and very apt. As audit is approaching nearby, bank audits are also approaching, and audit is a continuous work for all our auditors. So it is very important to have our documentation, have a list with us, what we are going to do. So in order to tackle this audit documentation in this third wave or as well as in this pandemic, we are having with us our eminent speaker, CA Parveen Kumarji. So on behalf of CMP of ICI, I welcome Parveenji. Welcome. Namaste. Second important topic is GST. Various arrest issues are there, various other provisions are there. So in order to take this critical analysis of these arrest issues in GST, we are having with us another speaker, CA Mohit Gupta ji. So on behalf of CMP, I welcome Mohit Gupta ji. Welcome Mohit ji. Namaste. I welcome all the members who have registered for this VCM and are now logged in for this VCM. So on behalf of CMP, I welcome all the members also. Due to the pre-scheduled meetings and some urgent meetings, chairman and vice chairman of CMP committee are not available. So they are engaged in some other meetings. So let me start with the today's VCM and let me take this opportunity to share with you the brief profile of our first eminent speaker, CA Parveen Kumarji. CA Parveen Kumarji is a senior partner and national head of assurance division of ASA. The organization has at its offices 8 offices with 700 plus team members. He is a chartered accountant with over 28 years of post-qualification experience. A commerce graduate, holds diploma in information system audit. Besides certification is IFRS from UK. He has had been a member of NACAS, National Advisory Committee on Accounting Standards, Accounting Standard Board, AASB and Expert Advisory Committee, besides various research groups and committees of the Institute of Chartered Accountants of India. He has experience of working on large number of risk advisory assignments, audits, forensic, fraud investigation, and IFRS transaction for various corporates. He is a speaker at national and international forums on his subject of expertise. He is a faculty with the reputed institutes like IMT, NAAA, Institute of Chartered Accountants of India, Institute of Company Secretaries of India, Institute of Chartered and Works Accountants of India, CAG, NIFM, MCA, IICA, Delhi University, etc. He has written a book on consolidation under IFRS, conversed with Indian standards, besides papers and articles published in various renowned journals and magazines. He is invited to present paper by reputed institutions in Japan, Nepal, Myanmar, Dubai, Singapore, besides various large companies and branches of Institute of Chartered Accountants across the country. His personal hobbies include marathon running, and he has given his best during this pandemic of first wave as well as the second wave by the various online seminars, webinars, and virtual CPE meetings. So once again, I welcome you, Parveenji. Welcome to you, sir. We are having with us another speaker, CA Mohit Gupta ji. Mohit Gupta is a qualified chartered accountant and working as an associate at Lakshmi Kumar and Sridhan attorneys involved in the transaction advisory practice of the firm. He has several years of experience in indirect taxation advisory. He is a two-time rank holder of CA Institute examination and has been actively involved in the various conventions, conferences organized by Institute of Chartered Accountants. He has been advising clients on wide range of indirect tax matters including GST, service tax, customs, foreign trade policy, legal laws. He has also worked with clients in various industries like real estate sector, infrastructure sector, auto parts, consumer durable, FMCG, etc. He is also a faculty of GST trainer of Institute of Chartered Accountant. He has been giving seminars, webinars, VCM on various platforms from past several years. He has also given various training sessions in corporates and trained various professionals. He has authored numerous books on various topics under GST and service tax. So I also welcome you, CA Mohit Gupta ji. So today's first topic is the very important topic, that is the audit documentation during this pandemic. So without wasting much more time, I request Parveen ji to please enlighten all of us with your expertise and with your words for wisdom. Over to Parveen.
Thank you so much, Anil ji, for elaborate introduction, and great pleasure meeting you, Mohit. And if you allow, I will be sharing my presentation with all of you.
Yes, sir. Yes, sir.
So, friends, good afternoon. First thing first, whatever I am going to discuss today is coming out of my own experience, and these are views which are personal views. In no way these views can be taken as the views of the institute or the Accounting Standard Board or any other regulator. These are my very personal views. So whatever I am going to share with you is coming out of my own experience, and these are my personal views. So of late, we have been receiving these questions, and we have been looking into some reports which regulators have published. The issue of audit has come into limelight, and a lot of people are discussing pros and cons and various dimensions of this profession. As all of you are aware that of late, the new regulator, NAFRA, has also started looking into audit documentation. So this presentation, which I am going to do, and the time which I have been given is approximately 40-45 minutes. I will be sharing with you, what should be the audit documentation, what should be there in your audit work paper file. I'll be touching upon the way I have created this presentation is first, there will be an overview, what audit documentation is all about and why it is necessary and how it has become important in present scenario. I'll touch upon, the rules, some portion from regulations of NAFRA, and one case study as an example, what papers you should have in your work paper file. And this presentation will also help you in creating your own audit work paper files. A very significant area, because nowadays the definition of audit is undergoing a change. It's not that the signing partner has convinced himself and is comfortable with the audit, so he signs off. It is 2 years or 4 years or 6 years later when the regulator will come and see the work papers. So whatever paper is lying in your audit file, audit work paper, whatever. So whether those paper are speaking or not, only where you are able to demonstrate that audit was done in this manner through these work papers. So then only it will be treated as the audit was actually done. So straight away coming to the topic, why it has become more important and what is the overview of audit documentation. So what we have seen while doing some reviews, and it has come into the report of FRRB also, that most of the audit files, they may have evidence which were sought during the audit, like for example, copy of the ledgers, copy of the invoices, copy of the returns, GST return, TDS returns, and everything. Those papers are lying in the file. But what was observed was that these paper which were lying in the file, what was done to that those paper, that documentation was not robust. And actually speaking, when I was doing my articleship, we used to do a red tick, on the number of invoice in the ledger, and that used to be assumed that this number was checked from a different place. But nowadays it is not sufficient. You need to have proper documentation, which we will be discussing in this presentation now. So what is audit documentation is that a document which is providing evidence that the audit was carried out. So, audit documentation, when you read it reverse, you will make a little more sense of it. The documentation which will provide you evidence of whether audit was done and how it was done. So what audit procedures were performed? what was the evidences which were which were obtained, and what was the conclusion which was reached. So that is what is going to be overall theme of my presentation. So basically, how did you reach to your report? If you are doing a statutory audit, you need to make a report on whether the financial statements, which includes the balance sheet, the statement of P&L and profit and loss, and cash flow statements read with accounting policies and notes to accounts, whether these financial statements are providing true and fair picture, and if not, what are the basis for your modification. So basically, how did you reach to that conclusion? That basis should be coming out of your work paper, audit documentation. And also, the audit was carried out in accordance with auditing standards and regulatory requirements. So the institute has issued all standards on auditing, which are aligned with international standards on auditing. And if your client is in a particular sector like banking or insurance, then there are regulatory requirements of RBI or IRDA. And if it is a listed company, then SEBI has given some regulatory requirement. So whether these audits were conducted as per the regulatory requirements or not. And the topic of today, why it is more important, is that during the COVID time, during this pandemic, a lot of work is being done virtually. A lot of audits are being done. A lot of data is being collected online. The audits are being done online. And the auditors are reaching to the conclusion and giving their reports based on the procedures which were carried out online. So, if you read Standard on Auditing 230, SA 230, it provides very clear guidance on auditors' responsibility to prepare these audit documents. So in current scenario, how will you prepare your audit documentation? How will you be able to convince the person who is reviewing your work papers that you have sought the information which was required, you have carried out your audit procedures, and this is how you reached at the conclusion which is being given in your audit report. So the overall requirement of your audit documentation should be that these papers should assist the team in planning, conducting, and supervising the audits. So when we prepare audit files, so I can share with you some examples which are very practical examples, and we have implemented it in our audits. So when we sit down and let us say if some client or a company which is a listed company asks us to carry out an audit, so after completing the formalities, we sit down to plan what are the business risk areas, what are the key risk areas, and then we decide what should be the audit strategy. In these risk areas, this can be my audit strategy. And then we go into planning and execution based on that strategy. And then we conclude. So basically, the structuring of your planning, structuring of your audit documentation should be in such a manner that you should first of all make an assessment of what are the key risk areas and main business risk areas. Your audit strategy should be based on those areas where you need to focus more. And then your planning and execution and conclusion and fieldwork related documentation. These documents should enable the team, the audit team, to show the accountability and responsibility for the work done. So in your first page, if you have written that, okay, partner is responsible for this activity, manager is responsible to do these activities, and field work is being divided by team members. So suppose you are doing, line by line. So if you are doing audit of revenue, who is the person responsible for carrying out all the activities or the procedures in order to reach to the conclusion that revenue is showing true and fair picture? Then this documentation should also demonstrate that who has performed the work and who has reviewed the work. So a lot of companies are sharing data on email. It's a virtual word now. And who received the let's say the lead sheet and who carried out the activity as per the audit planning document and who has reviewed it. If you have received it on email, how you have stored that email into a particular folder, and whether you will be able to demonstrate that this work was actually carried out by this executive or this article clerk or this manager has reviewed the work. Then these audit documentation will serve as your record for future audits of the same entity. In case there are specific issues which have come up, then in future those issues can be referred to. So I can share with you, we were doing audit of a Japanese subsidiary company, and there was so this company was giving some kind of warranty, and the audit partners used to had a lot of debate on how this warranty should be accounted for, and whether the company what policy they were using, whether that was according to the audit to the accounting standards or not. And all that documentation, all those communication. So the query was written and sent to the management. The management sent the response, and then this how it got concluded. A complete audit memo was created, and trust me, after in the next year, that audit memo was used by a different partner who was signing the same audit. But they were very comfortable because they could see the all sides of arguments which had taken place in the past. And the client was also very comfortable because the client did not have to answer again all the issues. So even if it was the same partner, then that documentation which was created to understand how the accounting should be done for that work, that audit memo was very, very useful. So these audit documentation will always serve as a record for your future audits, and also it will be it will enable the review of these audit files. So suppose there is a quality review happening on that particular audit, those audit memos will always be helpful. So what I have seen that in some cases when we do the audit, we realize that our habit of raising audit query memorandum, AQM, that has actually helped not only us, but also the clients. Because when, let us say you are a small and medium accounting firm, auditing firm, you have been allotted some audit from the CAG office, and you have raised a question and you have sent that question through an email, which is audit query memorandum. And then the client has answered that question on the email. Tomorrow, if CAG comes back and look at that particular transaction and ask some question, you can always say that, okay, we had asked this question and this was the response of the management. And this is how we concluded that the stand which was taken by the management was okay, or we convinced the management that this particular view is not correct, and they had changed the view. So basically, in case there is a audit procedure, which auditor needs to carry out. For example, the inventory physical verification. So in COVID times, and if there is a lockdown or if there is travel is not happening, the team is not able to reach there, how have you carried out your audit procedure? So when the things have got normal, have you gone and did the physical verification on a later date and then did your rollback procedures? That means whatever inventory movement had happened after 31st March and the day when you visited, or in case you did inventory physical verification in the month of February, then you will need to do roll forward. So how did you reach to a conclusion that your audit work was sufficient or not? So you need to understand that these audit documentation will also provide you a support that in case you had a departure from your key audit procedure, main audit procedure, and how these alternate procedures were carried out. So these documentation, it's very, very critical. Now, I was having a discussion in one of the platforms, which was an international platform. So one of the auditor from a different jurisdiction, she asked a question that, in nowadays, a lot of questions are being asked and a lot of, doubts are being raised on the quality of documentation during audit. So how much we can document, how much we should document, how much papers we should keep in our files, so that tomorrow we should be able to answer in case a regulator asks any question. So in the literature which we have in our institute, and there are various standards. So what is critical is that if an experienced auditor, who has got no connection with this audit, if that person looks at your file and he is able to make out what was your key risk identified, how did you make the audit strategy, on the basis of that strategy, how did you do the planning, what were the audit procedures which were carried out, and when when those procedures were carried out, to what extent you did the checking, or to what extent you had gone into the deep of those items, and what was the nature, and then what was the outcome. If it is written on the on that paper, on that work paper, that what was the outcome. So you looked into revenue, you checked, you did your cutoff procedures, you made sure that revenue, if it was shown as 100, it was not 110 and it was not 90. How did you make sure that it is showing a true and fair picture? Whatever small little difference you found was below materiality level. The controls which the company had, so whether you checked those controls, whether you did a walkthrough, and whether you looked at into internal financial controls, what all procedures you performed, what all you did, and what was the outcome of that. And then if your issue which came out of that were not significant, then how did you include that into your overall conclusion? How did you make a report? So let us say you found there was an issue in internal controls. So the maker and checker, they both were sharing their passwords, and so you found that there is a weakness in the control system. Whether that weakness is affecting the true and fair picture, whether you have seen, you have found that there is a weakness, but whether that weakness is resulting in incorrect, representation, or it is affecting the true and fairness of the picture. So how did you reach to your conclusion that all these things, your audit risk, your risk identification, your audit strategy, your planning, execution, field work, and how did you reach to your conclusion? If it is all there in the file, and somebody who knows auditing, who is an experienced auditor, looks at the file, that person should be able to make out all these things which are mentioned here, all these things which I have discussed. It should be there in your work paper files. So, I can share with you another experience that, we did one audit, and the regulator who wanted to review the audit work paper file, so they made a call and fixed up appointment. And so we said that, okay, we will be asking our managers and partners who had carried out the audit to remain available, so that in case you have any question or something. That reviewer said, I do not want to meet anybody. You just keep your box files in the conference room, or if these are the files which were hard bounded, just keep that in conference room. I'll just go through the files and I will know what work was done, what was not done. You don't need to ask your managers or people who had carried out the audit to remain around and waste their time sitting outside the conference room and waiting whether I will need any clarification or not. Actually, that is the true spirit of audit documentation. Your audit documentation should be sufficient enough that a person who knows auditing, when the person will look into that audit work paper file, that person should know, the file should speak by itself. It should mention that how the audit procedures were planned, what was the nature, what was the sample you have picked up, what was the timing, when did they do the those procedures, and then what was the result. Now you will say that our team has not gone to the client location. It is pandemic and it was lockdown, it was curfew, so team could not visit the client location. How will we document all this? Because the team had not gone. So the reverse question would be, then how did you do the audit? They will say that, okay, we asked for the information on the emails. Okay, perfect. Show me the emails, the printout, or the folder in which the emails were written, what checklist you had sent, and then how the client responded. All should be there. If you are keeping it in soft files, it should be there in properly made folders. If not in soft files, then you might have taken the printout of those emails. So many times, suppose you have asked for invoices or GST returns, then the client must have sent you the GST returns on the email. So you take a printout of the GST return and keep it in your file. But you forget to take a copy of the forwarding mail, which will demonstrate that this information was provided by this person on this date at this time, and it was forwarded to these people. And then what all activities were done by those people, keeping those returns in your file is not enough. In case you found that the returns are not matching with the ledgers, sales ledgers or revenue ledgers, then what did you do? Then you have to somewhere mention in your audit work paper that, okay, these returns were received. We reconciled these returns with the ledger or the register. These were the variances which were found. And this is what the reconciliation the management had provided. And these differences are above materiality level or below materiality level. If these are above materiality level, then the management corrected their financial statements or the returns were corrected later on. Here is a copy of that. If it was below materiality level, we left it as unadjusted error. So, and you can, who has done this activity, that person can sign off, or that person might not have come to the office. The person might have done the exercise and written an email to the manager or the partner, and that partner might have reviewed whatever activity was done. So if all these papers are available, an experienced auditor will easily make out that yes, at least this procedure was performed, that GST returns were matched with the financial statements. So I had given you just one example. There can be so many examples how in the virtual world you will maintain the documentation. But the objective is that the person who is looking at your audit documentation should be able to make out that yes, the work was done, this much work was done, this is how it was planned. So I'll take the same example of, let us say, GST review, whether it was matching with the books of accounts. Or you have asked the client for, invoices of the new machinery purchased on which they had charged depreciation in the financial statement. So the PCENT, purpose, what was the objective? Why? It should be all written there on the paper which you have received. What was the purpose of this? You wanted to check whether the revenue was showing true and fair picture or not. You wanted to reconcile what they are reporting to the GST authorities. Whether your books of accounts are speaking the same language. So you wanted to do revenue recognition. You wanted to review the revenue recognition of the company. So what was the objective and what was the purpose, for which you had collected this document and why you have carried out those procedures? Source, who provided you this information? You may say that, okay, I downloaded it from the website. But then who downloaded it and when did they download it and why did they download it? or if the client has provided you. So many times, I see that in the work paper, in the audit work paper file, you will find that invoices are kept in the file for checking whether all the fixed asset addition were done or not. So who provided that information? Or there is an Excel sheet which is showing this is how the depreciation was calculated and this is how it was done. Who provided you that? If the client has provided you, the email has to be kept in the. So what is the source of that evidence, whether it was provided by the entity or the third party? So another very critical point which I want to mention here is that one of the recent accounting fraud which had taken place in India, the audit team had obtained the bank confirmation letters. So they wanted to check whether the bank balances which were showing in the ledger, they were matching with the bank records or not. So they went and told the client that we need bank confirmation letter. Client was under tremendous pressure that we need to submit and we need to finish the audit. You let us know what is required to be done. They said that we need bank confirmation letters. So client went and provided them the bank confirmation letter a day before they had to complete the audit. The audit team was very happy. They received the bank confirmation letter and kept it in the file. But those confirmation letters were fake because the client had done some manipulation in the books of accounts. And the client went to the other room, printed those balance confirmation letters and provided to the auditors. So who provided those banks? So whether those confirmations were received from the bank directly, if yes, then whether the email printout has been taken, and if it was sent by speed post or by some kind of physical letter, whether that was done. And in virtual world, a lot of these confirmations are taken through online application platform. Like one of those is confirmation.com. So whether you applied and the bank has accepted you, your audit trail is available or not. So what is source of your evidence need to be there. So conclusion should be documented for audit procedures, whatever audit procedures you were performed. So you looked at the paper, you looked at the bank confirmation letter, whether you have written, okay, I have received these confirmation, and that's it. Whether they are matching with the ledger or not, you have checked it. Nah? So you have to mention that we checked it with the ledger account and we found that only this much was the difference, which were reconciled later on and provided by the management. So what all sample did you pick up and how did you pick up that sample? So suppose there are, thousands of line items in your revenue ledgers. You picked up, let's say 150 transactions to check. How did you pick up those 150? Whether you applied, random number technique or, whether you used some kind of tool, some kind of audit software. So what was, your methodology? Why did you pick up these 150 sample? Why did you not pick up the other ones? And what audit procedures? What was the nature? What did you do on those papers which you have received? And timing. What is the period of the evidence? And when did you do that? This is all, your work paper should carry. We call it peasant form. So this information should be there. Now I come to NAFRA, the new regulator which has come into play, and Rule 8 of 2018 rules of NAFRA. They provide powers to this regulator to review the work papers, including your audit plans and other documents, and also the reviewer, the regulator should be able to or will have power to evaluate the sufficiency of your audit control system, the quality control system, and perform such other testing of the audit. So these all powers are coming from Rule 8. I'll be sharing one example with you. The report was published, and there was a lot of discussion, and Frankly, some of the people said that it's a very, very difficult benchmark which has been set by this regulator, which is going beyond, what benchmark was earlier set. But I'm sharing it with you so that, you should be aware that while preparing your audit file or preparing your audit documentation, you should be clear that, okay, these papers or these kind of observation might be there by a regulator or by a reviewer. So this particular audit which was carried out, and the regulator came and reviewed their work papers. At 11 places, they found that whatever information was there in the soft file was different from what was the printout which was taken. So, is it not very common? You take some information from the client, you keep it in your record. Client, does some other changes, and finally you take the printout. Those two papers are different. So it is very important for you to understand that if you are maintaining your audit work paper in soft file, and you have some papers in your hard file, which are the printouts, at least they should talk to each other. They should be similar. So I have some advice for you. If you want to maintain your audit work paper in soft file, then maintain it in soft file. If you want to keep it in hard file, then everything should be taken and kept it in the hard file. It should not be two ways. You should be maintaining your audit documentation. That is, advisable, because these kind of situation might come up. Then another observation was that lack of evidence of any analysis which was carried out by the audit firm, and no accompanying, so basically, when the management did carry out assumption on the going concern, then how did auditor analyzed whether the going concern assumption is appropriate or not? There was no evidence. So why did I, put it up on the slide, and why am I discussing it with you? Tomorrow, when you are doing an audit, and your work paper should demonstrate that if management has given you some estimates and management has taken some estimate on going concern, you should also do your own analysis. It's not that the management has given you, comfort letter from the head office and said that, okay, fine, you can carry on with the going concern. No, you should carry out your own going concern analysis. So in this particular case, there was, identification of fraud risk. So if you have identified that there is a fraud risk in the company, so, whether those fraud risk, they were properly addressed, and what kind of procedures were carried out by those fraud risks to understand that no fraud has taken place. Or so when the fraud risks were there identified, whether those were what procedures were carried out. Then your audit strategy memorandum, it was also brought under question. So your strategy document, your planning and substantive work done, they should all talk to each other. So if you feel that there is a risk area of revenue recognition or receivables, then your, the strategy that, okay, you will take into account these areas, and your planning and field work should also pick threads from there, and it should all be aligned. And then, audit strategy memorandum should flow through till the time the conclusion is done. The work papers only mentioned, this is what was the observation, that the engagement partner updated the team, but there was documentation of why, this kind of sector, it was BFSI, banking and NBFC sector, whether, what kind of background is in the sector, and what was the major audit procedures, and why we are doing that kind of procedure. Those things were not found in the audit work paper. So when you are preparing your work papers, you need to make sure that whenever you are doing briefing, so if you are a partner and you are sending your team members to do the audit, brief them about the industry, brief them about, and document that. There has to be a minutes of the meeting which will mention that, okay, this was the background and this is how the issues were addressed. Then they found that one management representation note was there lying in the file. Management representation note was not addressed to the auditors and was not signed. So they said that this is not acceptable. So whenever you are taking a management representation, there are many observations which were there in this report. You can refer to, the source which I am mentioning on this slide itself. You can go to NAFRA sites and then files, and you can, download this report and you can look at what all were the observations. Like one of the observation was that expected credit loss, what this loss was reversed by the client. What were the procedures carried out by the auditor in order to ensure that, these provisions were reversed? It was not out of the blues. There was some reasoning, and those were not mentioned there. In some cases, evidence of what samples were verified and how did you pick up the samples, they were not there in the audit file. And then some places they found that there was a copy of an agreement which was lying, which was a tri-party agreement, but one of the party did not sign. Their signatures were not there. So many times when you're doing the audit, the client will say that, okay, I have made a draft, we have sent to the party, and they are going to sign it. You keep it in your audit file. You look at that and you find that, okay, this is fine. The accounting is done properly, but you forgot to take what was the final signed copy, what had come. So it is very important to see that your work papers are complete. In case they are not complete, on the first page of the file, you should keep mentioning what are the pending documents from there. So, basically, there were many other observations, but ultimately, what a regulator wanted was that your audit work paper file should carry what activities were done, what was pending, what was not pending, and how did you obtain and when did you obtain. So basically, when you prepare your files, here is an example, which I want to share with you, that your audit work paper can be divided into these 5 broad areas. You can have many other areas. You can define it according to your own procedures. You can define your audit working paper file, but I'm keeping in mind that you are small and medium practitioners, and you do not want to carry so much of work papers. You are doing audit of a small private company or a partnership firm, but it is fine. I mean, you can have 5 sections in a file, but it is important to have proper papers which will demonstrate that your appointment formalities were done, your audit planning was done, the way you had carried out the audit, the execution, how it was done, what procedures you carried out, and what was your completion and reporting. So these are the 5 areas which broadly, so you can, when you're making your audit work paper file, broadly these 5 areas can be bifurcated. And in case your audit is of a large company, you can have 1 file for audit formalities, 2 files for audit planning, and many files for audit execution and other procedure, different file for different audit procedures, and then completion reporting. So I will be sharing with you some example of which areas can be taken into account. So let's say appointment formalities, the SQC or risk management. So as required by SQC, you need to have a background check and KYC of your clients. And then client engagement or acceptance decision checklist should be there in your file. The risk categorization must be there. And then signed independent confirmation from all the partners. So many times we feel that, in a smaller firm, audit firm, just give me a second. So you may you may say that, okay, we are only three partners and we are working from the same office. We spoke to each other and we know that none of these people have taken, shares of this listed company. And we know that there is no compromise on the independence, and you accept the audit. But friends, as I had mentioned, it is very, very important to document that and take a signed confirmation letter from all the partners. Even if there are one or two or three partners, at least your team members, take independence confirmation, because it is required. Tomorrow, if somebody will sit in your room and start looking at the file, want to review, you cannot say, no, I had a partner. I spoke to him on that day. I picked up the phone and spoke to him. He said he was not having shares of that company. So I accepted the audit. No. It's not supposed to be done like this. Your documentation should be there. Your partner should have signed the independence and it should be there in your work paper file. Whether you are doing a small company, whether you are doing a large company, whether you are doing a private limited partnership firm, LLP, proprietorship, you should have a signed independence confirmation from all the partners. It should be there in your file. And then if you are doing audit of a company, then your Companies Act provides you a lot of insight that there has to be a board approval, there has to be a shareholders approval, intimation to previous auditor. If you look at the disciplinary cases, many of the cases are filed, and the conviction is done because the auditor who is accepting the audit has not communicated with the previous auditor. It is very important part. Of course, you will always file ADT 1 to the ROC, but it is very important to have your signed engagement letter also. And in your engagement letter, you can always put some limitations on the risks which you will be carrying. Like, for example, communication through emails. A lot of information is coming to you in soft form, and especially during this pandemic period. So in case the data leak happens, or the compromise happen on the way when the data is coming to you, you please mention that this data I'm communication through emails or through soft form, is the risk is with the client. They will need to make sure that so whatever you are doing this activity, it is with permission and the risk is with the client. So when did you do this documentation? That is very critical. So nowadays, because all the communication is happening on the email, and every email will have a date stamp, so you should take a printout of that email which has come on that date, and keep it in your file in case you are keeping only hard files. Now, one point which I want to share with all of you is, like, there is a requirement of UDIN, unique identification of each certificate or each report which you are signing. So, please make sure that you make a habit of logging on and taking the UDIN on the same day when you are signing. It will help you. Let's avoid, please do not get into the backdated signing, because that is one thing which is not allowed as per the ethics. Backdating should not be done. So you need to make sure that your audit documentation is completing the appointment formalities. And the way you have done the planning, your audit planning memorandum should carry out, should define what is the scope of your audit, what is the client business, what is the team composition. When you are doing a team meeting, you can do it online. I mean, it is fine. You can keep a recording of, in case you are doing it on Zoom. In case you are not, then you can write a minutes of the meeting and circulate to the team members, and keep a copy of that email that your team planning was done. So, frankly speaking, during this period, maintaining audit documentation is truly easy, because everything you discuss, you type it on the email. It was pleasure talking to you, and we had discussed the following items: 1, 2, 3, 4, 5. Mail. Your audit documentation is done. I mean, if somebody comes, that mail should be accessible to you. What planning you did, what analytical you did, whether you compared it with the previous years or not, what was the materiality, how did you identify the risk, and what kind of audit strategy and what man hours you planned. So this should all be there in your planning documentation. So when you are doing execution, you will need to, connect every dot, your audit program, then your lead sheet, what is coming out of your balance sheet, and then your lead memo, how did you carry out the audit, what work was done, and which was the data which you have received from the client. It should all be there in your execution file. So these slides will be there with you, and I believe the recording will also be shared with you. You can refer to these slides and you can look into various procedures. These are just examples. These are just examples what you can keep in your audit file. In case your client is reporting on Ind AS, your client is reporting in accounting standards, which level 1, 2, 3, and now level 4. And what are the related party transactions, how, if it is a company, how the corporate governance, and how did you do the IT testing, ITGC and other testing. What were the litigations, how did you reach to their lawyers, and how did you use the internal audit work papers or the reports. And one important point is that review of so many times what you do is you say that you request the client, please send me the minutes of your board meetings. You keep the copy of the minutes in your file. But is it sufficient? No, it is not. I mean, you need to mention what did you do with these minutes. So you can create a summary and say that, okay, these minutes, no relevance, or there was a relevant, and then you saw, that they have authorized to open a bank account. That bank account was existing in your books of accounts. In one case, we found that the management has approved authorized signatory for a bank account to be opened of the company. And we realized that bank account was not appearing in the balance sheet. So we asked the question from CFO, how can you? So we found it from the minutes. So they said, no, it was a nil balance and we forgot and all those kind of stuff. And then we requested them and then we reported to the audit committee that this bank account was, even though it was a nil balance, it was running out of the books of accounts of the company. It was not being captured by the ERP system. So you can always, your documentation should always mention what was there, what was the activity which was carried out and how did you conclude. So as I had mentioned and shared with you in that example, you need to be very careful in present scenario as far as going concern is concerned. As far as your audit of going concern, management estimation of going concern, it is not your estimation, it is your review of the management estimation of going concern. If the company is really in a tough situation and because of this pandemic, you feel that this company is going to close in some time, and many times you find that a subsequent event would demonstrate that something has happened with the company. You need to be very, very careful in that scenario. And Standard on Auditing 570 will give you guidance on that. This point I have already discussed with you that, merely putting copies of minutes of the board meeting is not sufficient. You need to carry out what all activity and you need to summarize that, okay, all these we have seen, there is nothing which is not getting captured in your financial statements or, in the financial reporting. Then there are in present scenario there can be a lot of litigation, there can be a lot of claims and a lot of changes in the law and regulations which might be there. So you need to have very clear documentation around this. And I think Mohit will be talking about some serious provisions of prosecution of GST. So you need to see, whether the management have control systems to monitor whether all these changes are being being incorporated, and they have a control system to look at if there is any non-compliance. Then SA 540 requires you to have a review audit of key assumptions. This is one area which is very, very sensitive. And trust me, the management may use this as an area, to manipulate the financial statements. So you need to be very, very careful how the management is making key estimates and what are the basis of their assumptions. And you need to go through the background and not only do that, but also document how did you question it. So if somebody has done a provisioning or somebody has reversed the provisioning, your documentation should clearly mention, your work paper should mention that, okay, this is how we draw our, this is how we carried out our audit procedures and realized that these assumptions were, helping the management in creating a true and fair picture of the financial statement. Completion and reporting section is critical. You cannot get away by leaving it loose ended. You need to have conclusion on your significant issues. You need to have management representation letter, but please remember, management representation letter is not an alternate to your audit procedure. You need to look at subsequent events. You need to communicate with those charged with governance, and you need to demonstrate that you have worked on CARO reporting, and there are new changes which are coming, from April 1, 2022. You will be reporting, on the new CARO, and there are various provisions which are new. The ratio analysis and whether the company's current liabilities and current assets and, the properties, Benami property, all those new clauses are there in CARO. You need to be very, very careful. And your documentation should mention all of these, not only the issues, the significant issues, what audit procedures you carried out, and what was your conclusion. And when you take the MRL, please be very careful. It is not a substitute. So one person, mentioned to me that I did the audit and I was doing this activity, and management said, okay, don't worry, we will give you MRL and you give us your report. But my dear sir, that MRL is in any case there, it is not alternate to your audit procedures. Management in any case is going to sign the balance sheet and give it to you. So if in the MRL also they say that, okay, my assets are worth this much, they are in any case signing the balance sheet. So representation needs to be very carefully drafted. And when you will draft it in such a manner which is required as per standard on auditing 580, then only the regulator will get a comfort that, okay, this is the additional representation which you have received. So many times the balance sheets and the statement of profit and loss are, they are mentioned in the MRL. So please be very, very careful. So subsequent events, as I had mentioned, that COVID situation might have a significant impact on the financial statement. So be very, very careful in understanding what can be so after 31st March, if you are signing the balance sheet so if you are signing a balance sheet of 31st March and you are signing it in the month of June or July, whatever happened in between may also impact your audit report. And you need to be very, very careful about. Then communication with those charged with governance. There is very clear guidance which has been given in Standard on Auditing 260 and 265. I think this point has been taken lightly by the people, and many times they feel that whatever we have communicated, whatever presentation we have made to the audit committee is sufficient enough. But please look at the report which I had discussed today. It was not treated as sufficient. You need to have some minimum matters which are supposed to be communicated to those charged with governance about the planning and the conclusions. And you have to have the minutes of the meeting with those charged with governance. So whenever you are doing your audit reporting, your CARO, if you are doing audit of a company, then carefully collect all the evidence and mention on your audit documentation that this is how we have concluded. And then your deliverables reviewed Who reviewed? When did they review? What was their review points? So if you are a partner and your article clerk has done the audit, how have you done the review? What instructions? So just we need to develop the habit of writing it on that paper itself, that this is how I had reviewed and this is how you can sign off. So basically, the recap I can share with you is the documentation is very, very critical. Whatever audit you have done, it is not that you have got a comfort and you are giving a report. It is the file it should be mentioned what all activities were done and how did you conclude, and whatever activities were done, whether they were in order, where they in order, they were actually according to the planning which you had carried out, and your planning was according to the risk which you had identified and your audit strategy which you have created. So I hope this presentation would be useful for you. You can refer to it again also whenever the recording is made available. And in case you have any questions, I'll be glad to answer those questions. So, Anilji, if you have received any questions, so you can share it with me so that I can answer those.
Sir, can you hear me? Can you hear me?
Yeah.
So there are a few questions for you. The first question is regarding, do audit documentation required to be maintained in writing? And meaning we need to write and keep the list of all activities performed, or just maintain in Excel is sufficient?
Can you please repeat, Anilji? Because
question is, do audit documentation required to maintain in writing? Meaning we need to write and keep the list of all such activities performed, or just maintain in Excel sheet is sufficient?
So, documentation means keeping things in writing.
Right. Yes.
Right in the Excel sheet itself, and that should be sufficient. But you need to maintain it. Whether you write it in the Excel sheet and save it somewhere, then also it is okay. You can write it and keep it in your keep a printout in your file. That is also okay.
Yes, sir. Can the partner, instead of writing the execution of audit procedure, keep an audio file? Instead of writing the execution of audit procedures, keep an audio file?
Yeah, this is an interesting question. I mean, of course, if the audit audio file is maintained in such a manner that after 6 years or 8 years, if somebody want to see whether the planning was done or not, and if that audio file is still preserved, it is kept there, so it can be proved that this audio file was there and who all were the listener to this audio file. So if they have also participated, then yes, it is okay. Many times people are now maintaining a record of these Zoom meetings, and those recordings are kept. So ultimately the regulator will see that whether the instructions were properly passed on to the team or not. So whether it is audio file, video file, written file, memo, so it is all acceptable. Should be.
A quick query with regard to the procedures pertaining to the vouching of invoices and other documents. He is asking, sir, post-COVID era, we have started to obtain the scanned copies of the bills and other documents. Scanned copies of bills and other documents, and accordingly perform our vouching procedures. However, is it still mandatory for us to physically verify those bills even after obtaining adequate comfort based on our vouching procedure as detailed as we have already mentioned?
So as I had mentioned that you need to demonstrate to the regulator how did you draw your comfort. If you have carried out audit based on alternate procedures like receiving the scan copies, then how did you make sure that those scan copies were not altered and were not fake? What activities you had carried out in order to get your comfort on when you are able to reach to conclusion based on that. So you need to really do your own test checking based on that, and that has to be written down and documented that this is how you have done. And if you want to, if you're not very comfortable and want to ask the client to send you or show you the originals, you can always go ahead and do it.
Right, sir. How to summarize all documentation in some sheets or pages?
So that depends on the size of the company and the complexity of the audit. So, like I broadly shared, those 5 areas. You can expand it or you can shrink it the way depending on the complexity of and the size of the audit. So I think you can divide it into various areas.
Last question for you, sir. Is it better to get the draft paper signed by the client?
Sorry.
Draft paper signed by the client.
Draft papers signed by the client. So I think it is very, very important that whatever document you are receiving from the client, you have to demonstrate that they were given by the client. Tomorrow, what can happen is, client will say, no, this was not the file which I had given to you. So it is very important to have either their signature or some evidence which will prove that which will be able, you will be able to prove that these were given by the client only. So their email, and if it is there on the face of the email, and if you want to keep a hard copy, then print out of that mail. Otherwise, you ask the client to sign it and stamp it.
Fine, so these were the 2 questions for you, sir. It was wonderful deliberation, sir. And frankly speaking, I have gained a lot from your deliberation. Hope our members have also gained a lot through your detailed deliberation, sir. So on behalf of CMP of ICI, I extend my heartiest thanks to you, sir, for sparing your valuable time. Thank you so much, sir. Thank you. Thank you. Thank you. So moving on to the another session, the critical analysis of the various provisions of arrest issues in the GST. We are having with us Mohit Gupta ji. So Mohit Gupta ji, without wasting much more time, I request yourself to kindly deliberate on the topic. Over to Mohit ji, please.
Thank you, Anil ji. So, good evening, my dear colleagues. So, first of all, I would like to thank the CMP of ICI for providing me this wonderful opportunity to deliberate on this topic. And I would like to thank the audience for taking time out of their busy schedule and to attend this session. So, without delaying any further, I'll start the session. So, the topic for today is critical analysis of arrest provisions under GST law. So, in these times, especially in last 3-4 years, we have gotten used to hearing every few days that some GST department has busted some major racket, either DG GST or GST anti-evasion or other wing of tax authorities. They have busted some racket involving fake bills of 100 crores, 200 crores, 500 crores, 10,000 crores. And in various cases, even the tax professionals are being questioned by the authorities, and may also, in some cases, tax professionals also being arrested. So, in these times, it is very important to know that in past 3-4 years, especially after the introduction of GST law, the tax authorities have become very stringent in regarding involved in the cases where any form of fake invoicing is involved. So in these times, it is very important for every tax professional to have a complete and thorough knowledge of the provisions regarding arrest and prosecution under GST law, and to have a complete knowledge regarding the rights and obligation of client, of tax authorities, as well as of the tax professionals. So with this in mind, we will start today's session. So broadly, we will be covering the following topics in today's presentation. First topic is power to issue summon, who can issue summon, who can be summoned, and whether one of the most practical issues which comes up is whether the chartered accountant or the advocate can accompany the person who is being summoned to the tax authorities. Then next, we will cover about the arrest provisions, when the prosecution can be launched, who can be arrested, who has the power to arrest, in what cases the arrest can be done. And in recent times, again, a practice which has gained momentum is attachment of bank account by the tax authorities. So we will also cover that in brief, that in what cases the bank account can be attached and what is the procedure to get it removed, and what are the safeguards provided by the section in case of attachment of bank accounts. So first issue is power to issue summons. So if someone asks what is the meaning of summons, so in layman's language, summon means in a case where a proper officer or any tax officer thinks that they in any inquiry proceedings, attendance of any assessee or any person is necessary in any inquiry proceedings for giving any evidence, giving any statement, or giving any kind of document, then the tax officer can issue a summon to that person, and the person has to come and appear before the tax officer. So that is called a summon. So couple of important points to be noted in this section is the summon can be issued to any person. So suppose the inquiry proceeding has been launched against Mr. A. So it is not necessary that only Mr. A, or if in case of company, only the persons who are employed by the company, only they can be summoned. Any other person who is involved in that case. So the vendors of Mr. A, the customer of Mr. A, which are involved in that particular transaction, they may also be issued summons by the tax officer to conclude the inquiry proceedings. Usually, it is given for two different purposes. Either when a statement has to be recorded, in such case the person is summoned, or where some documents or evidence has to be produced by a person and which are in his custody. So in that case also the summon can be issued by the tax authorities. So the documents can be asked by the tax department either for a specific description or some specific document. So I'll just take an example to clarify it. So let's say there was a sale from Mr. A to Mr. B, and the tax department is investigating that sale transaction. So in that case, the tax department can summon Mr. A and ask all the documents regarding that particular sale transaction. So all the documents like tax invoices, e-way bill, law receipts, all the transaction regarding that, all the invoices, all the documents regarding that transaction can be summoned by the tax department. This is the first case where some specific document is asked. Tax department also has power to requisition all the documents of a specific description. So to give an example, in some cases we have seen that the tax department alleged some irregularities in the imports made by a client. So in that case, the tax department issued a summon to the client stating that please, in last 5 years or last 4 years, all the imports which we have done, so take out all the documents regarding all the imports and submit such documents to us, and we will scrutinize those documents. And such communication was made through a summon. So all the documents regarding a specific description can also be requisitioned by the tax authorities under this section. So now coming to the very practical problem under this section, which the client usually asks to their tax professional, to chartered accountants, to advocates, whether the client can, whether the CA or the advocate can accompany the client to the summon proceedings. So before discussing that, I would like to point out one important point, that who is liable to go, who is required to go to the summon proceeding. So let's say the summon is issued to a specific person, Mr. XYZ in XYZ Limited. So if the summon is issued to a specific person in a specific company, then only that person can go to the summon proceedings. In normal proceedings, when some documents has to be submitted, the taxable person can send his authorized signatory or can send his chartered accountant or a lawyer to attend. But in case of summon proceedings where the summons is issued to a specific person, in that case, only that person has to go to attend the summon proceedings, and he cannot send any other person to attend those proceedings. Now, in some cases, some practical issues may also come up. Let's say the summon is issued in the name of a director, and that director is out of India or out of state on those particular dates and is not available. So in these kind of cases, practically the solution is to submit a letter to the tax authorities stating the complete facts and with a request that this person is not available on so and so dates. So instead of that person, please issue a summon to this person, or please permit that person to come and produce the documents and record the statement. So that is how we deal with those cases where the person to whom summon is issued is not available. And in some cases, the summon may also be issued generally in the name of company. So in some cases, we have seen that someone is issued like to the concerned person in XYZ Limited. So it is not issued to a specific person. It is just issued in the name of company, and any person, any employee of that company who has the requisite knowledge regarding the transaction, they can attend the summon proceedings in those cases. But in any case, the tax professional, the chartered accountant or the advocate, they cannot attend the summon proceedings in the representative capacity of the client. The client itself, the employee of the client company, has to go themselves and record their statement. The chartered accountant or the advocate cannot go as an authorized signatory. Now, having said that, the next question which comes is, if a client says that the concerned person of the client is ready to go and get his statement recorded, but he wants the CA or advocate to accompany him to the tax department, saying that since obviously the tax professional has a better knowledge of the subject matter, so they want the tax professional to accompany them to the tax authorities for recording of their statement. So in that case, whether it is permissible or not. So for there is no clear provision under law regarding this. So we will be discussing various case laws which are there on this subject matter. So before starting with the case laws, I would like to invite your attention to Article 20 subclause 3 of Constitution of India. So Article 20 subsection 3 provides the right against self-incrimination to every citizen of India. So what does it mean? In simple language, it means that any person cannot be compelled to testify against himself. So let's say Mr. A is accused of a crime, and Mr. A is being questioned. So Article 20 states that if a question is asked to Mr. A and Mr. A knows that the answer will go against Mr. A himself, so Mr. A has a right to keep silent and not answer that question, because if he answers that question, it can go against Mr. A himself and it will incriminate him. So Mr. A has a right against self-incrimination, and Mr. A has a right to keep silent to such question and not answer them. So this is the fundamental right which is enshrined in Article 20 of our Constitution. So on basis of this principle, judgment came in 1987 in the case of Nandini Satpathy versus P.L. Dani and another, wherein the court, by our Honorable Supreme Court, wherein the Supreme Court held that the lawyer's presence is a constitutional right. It flows from Article 20 because Article 20 provides a right against self-incrimination. And in normal course of business, in normal course, the person who is being questioned, he may not know that how his answers will be used against him in a court of law. So he is entitled to have a lawyer present beside his side if he wants, so that the lawyer can guide him while answering the questions and save him from self-incrimination. So as self-incrimination is a constitutional right, lawyer's presence directly flow from such right, and it is also a constitutional right, and it cannot be denied to any person. So this Nandini Satpathy judgment concluded this position. But this Nandini Satpathy was pronounced in the context of common criminal law. It was not pronounced in context of fiscal law. So for fiscal law, the first significant judgment which came was of Pool Pandey in year 1992, again by Supreme Court. So in this judgment, the Supreme Court said that in fiscal laws like customs law, it is not when a summons is being issued and a statement of a person has to be recorded, the person does not have the right to have a lawyer present. and this judgment of Pool Pandey distinguished its earlier judgment in the case of Nandini Satpathy on the ground that Nandini Satpathy dealt with common criminal cases where a person was being accused of a crime. But in customs proceedings, in summon proceedings, in any fiscal law, be it customs, be it GST, be it service tax, be it excise, the customs proceedings are a very initial stage of any proceedings. In summons proceedings, the tax department is basically trying to determine whether any irregularity has taken place or not, and if it has taken place, who is responsible for such irregularity. So at this stage of summon proceedings, the tax department is not accusing any person of any crime. So when a statement is being recorded under section 70 in summon proceedings, it is merely for information purposes, and at that stage the tax authorities are not accusing any person, so there is no question of right of self incrimination, and consequently there is no legal right available with the person to have a lawyer present. So this was the whole ratio of Pool Pandey judgment, that in summons proceedings, presence of CA or the advocate cannot be made legally mandatory. But these judgments were pronounced way back in 1987 and 1992. So we will also see some recent judgments which was pronounced specifically in the context of GST law only. So in the case of Vijay Sajnani, it was pronounced by Honorable Supreme Court in 2017. In this case, the Supreme Court held that during interrogation of petitioner under Section 70, their counsel are allowed to be present within a visible distance but beyond hearing range. So they agreed with the principle given in the case of Pool Pandey, saying that since in these proceedings no one is accused, so it is not necessary that lawyer should be present with the assessee himself to assist in giving answers. So it cannot be allowed. So lawyer is not allowed to give assistance to the petitioner while the statement is being recorded. But in some cases, it was being observed that the tax department was using unethical practices like physical intimidation on the assessees to coerce them into giving a false statement. So if the assessee fears that he may be physically threatened or some other form of coercion may be done by the department, so in that case, he has a right to that the lawyer should be present within visible distance, so that the lawyer can see that there is no irregularity on the part of tax department. There is no irregularity in their conduct, but the lawyer is not allowed to hear anything about the conversation which is being done between the tax authorities and the assessee. Then similar judgment was pronounced in the case of Sudhir Kumar Agarwal by in the case of Delhi High Court, wherein the department, the courts held that no investigating officer has a right to use any unlawful method, any illegal method to extract information. But presence of a lawyer cannot be allowed at the time of questioning because it is not a legal right of the petitioner in the initial stages of summons proceedings. A relief was given by Gujarat High Court, taking a sympathetic view in Jignesh Bhajiawala, saying that the lawyer is allowed to be present with the assessee while recording the statement. But the court also gave a limitation on its judgment, saying that the court is giving this relief because of an extraordinary situation, and such right cannot be claimed by every assessee as a matter of his right. So this is the legal position regarding presence of a CA or advocate. So the next question which comes up is, this is all the legal position, but practically what does we as a professional, what should we guide the clients? How should they proceed if they have received any summons proceedings and they want their chartered accountant or their advocate to accompany them? Then what is the practical way forward? How should they proceed? So in this case, practically what is to be done? They can go to the department and they can request the department to allow their advocate or chartered accountant to accompany them. In most of the cases, the tax authorities allow the advocate or the chartered accountant to accompany the assessees during submission of the documents. But when the statement when the statements is supposed to be recorded, at that time the tax authorities clearly tells the advocate or CAs to sit outside the room and or sit at some distance so that the CA or advocate cannot hear what they are saying. So this much right is usually given by the tax authorities, and the client can ask them, the client can request them to so that their lawyer or advocate can be present at a visible distance but beyond hearing range. In case the department does not allow the lawyer to be present even at a visible distance, in that case the assessee can approach the jurisdictional high court, and in that case the jurisdictional high court will most probably issue directions to the tax authorities that the lawyer should be present within visible distance but beyond hearing range. Now, coming to the most important topic of our session, prosecution and arrest. So, the provisions of prosecution are given in Section 132 of CGST Act. So, Section 132, subsection 1 gives a long list of offences in which the assessee is liable for imprisonment and fine. So, out of that long list, there are 4 offences which are considered to be most serious. And in those offences, these offences have been made cognizable and non-bailable if the amount of these offences is above 5 crores. What is the meaning of cognizable and non-bailable? We will come to it in a while. So what are these offences? So first offense is supply of goods or services without issue of any invoice. So sale of any unbilled goods or any unbilled services, that is covered. Then second case is issuing of invoice without any actual supply of goods or services, leading to availment, utilization, or refund of ITC by the recipient. So let's say if Mr. A has issued an invoice to Mr. B, but there is no actual supply of goods or services between Mr. A and Mr. B, then issuance of such invoice is a offense under Section 132(1), and Mr. A is liable for punishment. Then clause C covers availment of ITC using such invoice, which is referred to in the above clause. So in our example, issuance of invoice was a offense for which Mr. A is punished. Mr. A can be punished. Now, when the invoice is received by Mr. B and Mr. B avails ITC on the basis of such invoice, then Mr. B has also committed an offense and Mr. B is also liable for punishment under Section 132. Now, a very interesting case study is there. So, when GST law was introduced in 2017, at that time, the GST law Section 132 only stated availment of ITC using fake invoice, basically using invoice referred to in above clause. So, availment of ITC using fake invoice. So I'll take an example. Let's say there is a taxpayer, Mr. A, who has a tax liability of rupees 100, and he does not have any ITC to pay off such tax liability. So Mr. A is liable to pay such amount purely from its bank account through cash. But Mr. A does not want to pay tax. So what Mr. A does, Mr. A puts a figure of rupees 100 in the ITC column of his GST returns. He does not have any valid tax invoice for availing such ITC. He just puts a figure of rupees 100 from thin air without any basis, without any backup. So this is clearly a fraudulent availment by Mr. A. But this was not getting covered under this clause because this clause only covered availment of ITC using fake invoice. But if a person is availing any ITC without any invoice, there is no invoice at all, that case was not covered under this clause. So the government amended this clause and added the following line: fraudulent availment of ITC without any invoice or bill, so as to cover this situation also. So these three clauses, I hope, are very clear, and these are largely related to fake invoicing or no invoicing in case unbilled supply of goods or service. Then we have fourth clause, which says that collection of any amount as GST, but failing to pay the same within 3 months from the due date. So basically, let's say some taxpayer, Mr. A, has issued a tax invoice, collected the invoice amount, including GST, from its customer, but Mr. A does not pay such GST amount to the government for the period of 3 months from the due date. So in that case, that also becomes a very serious offense because Mr. A has collected some amount from its customer from public in the name of GST, but have not paid such amount to the government and for the period of 3 months. So that offense is also punishable under section 132. So what is the punishment which is being prescribed? So where the tax amount involved in such offense is less than 1 crore, then there is no imprisonment. The imprisonment can be given only where the amount involved in offense is more than 1 crore. So if the tax amount evaded is between 1 crore to 2 crore, then up to 1 year imprisonment. Between if the amount of tax is between 2 to 5 crores, then up to 3 years. And if it is above 5 crores, then it is up to 5 years. And fine will be imposed in all the cases. So this 1 year, 3 years, and 5 years, this is the maximum time limit. Imprisonment can be given for lesser time limit also, but the imprisonment, if given, it should be for the minimum period of 6 months. If it is in exceptional cases, imprisonment may be given for less than 6 months also, but in those cases, the magistrate or the judge who has given such punishment, he has to record the reasons why less imprisonment is being given to the tax evader. Now, this is for the first time offense. If a person has committed an offense, then he will be punished according to these slabs. Now, let's say a person was tried for this offense. He was held guilty and he served his imprisonment. And after serving, he again committed same offense. Any of the offenses which is given in this category. Then when he commits such offense second time or any subsequent time, then he is liable for punishment of 5 years up to 5 years in prison without any threshold limit. So second time, even if the person, let's say the person has committed an offense of only rupees 50 lakhs, but earlier he committed the same offense and he served time in prison for that offense. Second time, he is liable for imprisonment up to 5 years without any threshold limit. So second time, even if the amount of tax evaded is only 50 lakhs, in that case also the person can be given the punishment of imprisonment up to the time of 5 years. Now, this was regarding prosecution or imprisonment. So practically what happens in this case, if the prosecution has to be launched, prosecution is launched usually after adjudication. The tax department issue show cause notice, they issue order. If in order the tax demand is there, then the tax authorities decide whether to launch prosecution or not. And if they decide to launch prosecution, then the case will go to court and the magistrate or judge, they will decide whether the person is guilty or not. But there is another section, section 69, which deals with the power to arrest. So section 132 deals with those cases basically where prosecution has to be launched after conclusion of all the proceedings, of all the adjudication proceedings. And in that case, the imprisonment will be given only after the court verdict. But section 69 gives a power to commissioner to arrest any person. So what does section 69 says? Section 69 says where a commissioner has reasons to believe that any person has committed any of the offense given in section 132, subsection 1, clause A to clause D. These 4 offenses which we discussed in the earlier slides. Where a person has committed any of these offenses and the amount of such offense is more than 2 crores, then the commissioner can authorize any of his officers to arrest such person. So in this case also, the offences are categorized into two different categories based on their amount. So first category is above 5 crores. So if where the person has committed those four specific offences and the amount involved is more than 5 crores, then it is held to be a cognizable and non-bailable offence. So what is the meaning of cognizable and non-bailable? So if I talk in layman's term, cognizable and non-bailable offence means an offence for which that any arresting officer, whether it is a police officer or a tax officer is also given the same power as a police officer. So the arresting officer can directly arrest a person without any warrant or court order. So in this case, where the commissioner has reasons to believe that a taxpayer has committed any of these four offences and the amount is more than 5 CR, the commissioner can authorize any of his officer, and officer can directly arrest the person who is suspected of being involved in such offence. And after arresting, they have to produce such person before the judicial magistrate within 24 hours of its arrest. Then the magistrate will decide whether to keep such person in custody or to release him on bail. And the second category of offences where the amount of tax involved is more than 2 crores but less than 5 crores. So in this case, the offence is considered to be non-cognizable and bailable. So in this case, basically, if that arresting officer has to arrest a person, they first have to go to court. They first have to convince a judge, show him the facts, take permission from the judge, issue a warrant, and only after that they can arrest a person. So practically what I have seen, usually where the tax amount involved is below 5 CR, the offence is non-cognizable. Usually in those cases, the tax department does not make any arrests, and arrests are usually made only in those cases where the amount is more than 5 CR. So this is a very important threshold to note, because in some cases we have seen where the tax department has tried to intimidate clients, saying that they can arrest the client, but the tax amount involved was actually less than 5 crores. So it is very important to know the meaning of these limits, the importance of 5 crores and 2 crores limit, and what are the rights of the client. And again, a same provision is there in section 69 also, which says that for second time offense, as well as any subsequent offense, this threshold limit will not be applicable. So if second time let's say the tax amount which is involved in the offense is only 50 lakhs, in that case also the offense will be considered as cognizable and non-bailable, and tax department can directly arrest such person without any court permission or warrant. Now, the most important phrase which is to be noted in section 69 is reason to believe, because the biggest question which comes into our mind: in what cases can the commissioner order an arrest? Let's say tax authorities only suspect in a case that Mr. A has issued a fake invoice to Mr. B, but tax authorities does not have any concrete proof that such invoice is fake and there was no actual movement of goods. So whether the tax department has the power to arrest Mr. A or Mr. B merely on the basis of their suspicion, or whether this arrest can be made only after adjudication, only after issuance of show cause notice and issuance of order. So there are various judgments which deliberate on the scope and meaning of the term reasons to believe. So one of the most important judgments on this point is the judgment of Tata Chemicals Limited by Honorable Supreme Court. So this judgment was issued in the context of customs law. So the facts of the case were the assessee imported some coal from outside India. So there was a condition in the customs notification that there should be some specific content of a specific let's say 0.25% should be there of some specific chemicals to be for availability of a specific exemption notification. So the assessee produced a certificate from an international reputed testing agency saying that we are meeting all the conditions of the exemption notification and hence we are claiming exemption. The customs authority the customs authorities did not question the certificate which was produced by the assessee, but they did their own testing. They drew a sample and sent it to their lab, and on the basis of test result, the tax department denied the exemption to the assessee. So in that case, the Supreme Court analyzed Section 18, subsection 1, clause B of the Customs Act, which also contains the same phrase, uh, reason to believe, a similar phrase. So in that case, the Supreme Court held that the phrases like deems it necessary, reason to believe, they does not confer any arbitrary power on the tax officer. It's not that when the reason to believe does not mean the tax officer can just think of anything and basis on his own opinion, the tax officer can do any action. So the reason to believe is used in a statute, so it should be used in accordance with the constraints given in the statute. So basically, it should be reasonable. The tax officer should have some reasonable material, reasonable evidence on the basis of which he has formed this reason to believe that there was some tax evasion and the tax was not paid. And only in such cases the tax officer can take the action. So the commissioner should have some tangible material, tangible evidence to come to the conclusion that the taxable person has committed any of the four offenses given in section 132, subsection 1. And only when the commissioner has such preliminary evidence, only then the commissioner can authorize the arrest of a person. Now we have one other judgment of in the case of Vimal Yashwantagiri Goswami. So in that case also they followed the principle of earlier judgment, and said that the commissioner should have credible material to form his reasons of belief, and commissioner should also record such reasons before arresting such person. However, the tax authorities are not legally obliged to provide such reasons to assessee. But if the assessee later on goes to court and alleges that there was no reasons to believe available to the tax department, in that case, the courts of law has the right to direct the tax officer to give such reasons of law. So in those cases, the reasons which were earlier recorded by the commissioner, they should be reproduced before the courts. And the person, when he is being arrested, the person should be informed of the grounds on which he is being arrested. So in some cases, we have seen that the tax department has given a very general declaration that the person has committed an offense specified under section 132, subsection 1, clause A, and on the basis of such action, we are arresting such person. So that kind of general declaration or general statement is not sufficient. The tax department should deliberate and give a detailed written account on why he is arresting such person and on what grounds, that the person was involved in fake billing. As a result, the person has committed an offense specified under section 132 1A to such and such person. The tax department should basically give a detailed ground of arrest, so that when the case goes to the trial court or the district court for before the magistrate should have the relevant facts. And such grounds of arrest should be present in the arrest memo, which is issued at the time of arrest of the person. And copy of arrest memo, the person who is being arrested, he has a right to get the copy of such arrest memo from the tax authorities. Then another major issue which comes up is whether this power to arrest can be exercised before adjudication, because our tax laws, all our fiscal laws basically runs on the principle that before determining any tax amount, before adjudicating any demand, opportunity of being heard has to be given to the person against whom demand is being raised. So in accordance with those principles, in every fiscal law, a clause is there which states that before issuing any demand order for paying the demand amount, a show cause notice has to be issued before the show cause notice has to be issued to the assessee. And after show cause notice, the assessor should be given an opportunity to represent his or her case, and only after that the final order will be issued. So now the question comes, if let's say the department has doubts that a person is involved in committing of such offences, but the department has not issued show cause notice and not issued the order, demand order yet, whether before issuance of such demand order can the department arrest such person. So we have a very good judgment in the case of Make My Trip Limited. It was pronounced by Delhi High Court and later on affirmed by the Supreme Court, which said that uh, before adjudication, how can you be sure that what is the amount of tax evaded and whether any evasion was there at all? So arrest can be made only after the adjudication proceedings are completed, only after show cause notice and order, demand order has been raised by the department. But this provision will not be applicable in the case of habitual evaders. So in case it is shown that the person is a habitual evader, he is not cooperating with the tax authorities, he has not filed his returns for the long time, or he has a history of doing such evasion earlier also. In such cases, the tax authorities can directly arrest the person. But in all the other cases where the assessor is compliant, the assessor has filed all the returns, the assessor is cooperating with the tax authorities, in such case, the tax authorities cannot arrest a person before issuance of demand order. But after this pronouncement of this judgment, another judgment came in the case of Vimal Yashwantgiri Goswami, wherein High Court took a different view and said that adjudication is not necessary for arrest. Section 69 is a complete code in itself, and to exercise arrest powers under Section 69, it is on if the commissioner has reasons to believe, based on some tangible materials, on some preliminary credible material, then that is enough to give the commissioner power to arrest, and the commissioner need not pass any adjudication orders to exercise the arrest power. This principle was also followed in the case of Telangana High Court, in the case of P.V. Ramana Reddy, which was later on affirmed by Supreme Court. So at present, we have two conflicting judgments, wherein one judgment says that adjudication is necessary before arrest, and the other judgment says adjudication is not necessary before arrest. So again, this is still a little bit of gray area, but the common principles which can be deciphered from this judgment, if the assessee is cooperating with the tax authorities and the assessee is compliant with the tax laws, then the tax department should not move ahead with the arrest of such person before passing the adjudication order. Then the penalties which are being prescribed for the offences which are there in section 132. So there are 21 different offences which are covered for imposition of penalty, which are given in section 122. So the penalties which are being prescribed for such offences, so it is basically categorized into two different categories. So where the short payment or non-payment of tax, or the fraudulent availment of ITC, or wrongful claim of refund, where such action was due to any reason other than fraud. So basically, for any bona fide reason, in such case, the penalty which can be levied is rupees 10,000 or 10% of the tax amount, whichever is higher. But where such evasion was due to fraud or willful misstatement or suppression of facts or intent to evade tax by the taxpayer, then the penalty will be 10,000 or the amount of tax, whichever is higher. And penalties for other offences like abatement, failure to appear on issuance of summons, in those cases the penalty is 25,000. So 25,000 under CGST Act, 25,000 under SGST Act, so total of 50,000. So where any person has assisted other person in commission of any of these offences, then that person can be charged for abatement of such offence and be liable for the general penalty. Also, if usually this question also comes from client, that if they have received a summon and they does not appear for the summon, then what will be the consequences? So a general penalty will be there for failure to appear on issuance of summons of rupees 50,000. Apart from that, Section 70 provides that issuance of summon proceedings is deemed to be a judicial proceedings under IPC. So IPC provides that non-appearance in judicial proceedings is liable for punishment of imprisonment up to 1 month. So if you do not appear on the due date of summon, you may be liable for imprisonment for the period of up to 1 month. And IPC also provides that giving any wrongful statement in any judicial proceedings is liable for imprisonment for up to a period of 3 years. So it is very important that the statement which is being given in summon proceedings, it is completely truthful and no false statement is given. If the person who is being questioned does not know the facts or does not know the legal position, let's say the tax department is questioning a person regarding taxability of a transaction and the person is not sure about the taxability or the why the company has not paid tax. So in that case, it is better for that person to say that I don't know about the taxability. I have to go and consult. I have to go and consult my CA, my advocate, and get his opinion before giving any final opinion. And as of right now, I am not sure about the taxability. This type of a statement is better than giving a statement saying that this transaction is not taxable when the person is not sure about the taxability, because giving any false statement is liable for imprisonment up to 3 years. Then coming to the last topic of our session, provisional attachment. So section 83 of CGST Act provides that where during pendency of any proceedings, the commissioner is of the opinion that the property of a person has to be attached for protecting the revenue. So this power cannot be exercised in each and every case by the tax authorities. So this is basically a preventive measure to protect the revenue of the clients. So where the tax department is of the view that the person who is under adjudication, the person can run away before completion of the adjudication. In that case, the tax department will not be able to recover all their tax amount. So in that case, the commissioner can pass an order and attach the property of the taxpayer. So the including bank account. So practically, the tax departments are issuing a lot of notices these days and attaching the bank account in in all the cases where they are of the opinion that the taxpayer might run away. But such provisional attachment is only effective for the period of 1 year, and after expiry of that year, the provisional attachment gets automatically over. And after 1 year, the taxpayer can approach the banks and get such attachment order lifted. So a couple of amendments are being done was being done by in this clause by the tax department. So first amendment was, if you see the language of this section, it says that where during the pendency of any proceedings under section 62, assessment of non-filer of returns 63, 64, 67, 73, 74. So where any proceeding is pending under any of these sections, only in such cases the commissioner can pass an order. So we have some judgments by various high courts on this point. The first judgment is Kushal Limited in the case of Gujarat High Court, wherein it was held that where the search proceedings under section 67 were concluded, the search proceedings were conducted, there was no incriminating evidence found at the premises of the assessee, and the search proceedings were concluded, and no show cause notice were issued under section 73 or 74. And the tax department issued an order for provisional attachment of the bank account. So in that case, the High Court held that the order can be issued only when the proceedings are pending under any of these sections. So in this case, the proceedings under section 67 were concluded, and proceedings under section 73 was not initiated. So there was no pending proceedings as on the date of issuance of such attachment order. So bank account cannot be attached in absence of any pending proceedings. Similar judgment was given in by Punjab and Haryana High Court, saying that after completion of such proceeding, provisional attachment of bank account cannot be done. So now the law is being amended, and now they have written where after the initiation of any proceedings under chapter 12, 14 or 15. So where now where the tax department initiates any proceedings under any of these sections, after initiation of such proceeding, the tax department has a right to issue the attachment order, irrespective of whether the proceedings have concluded or they are pending. Then we have another important amendment under section 83. So before coming to this amendment, I would like to go back to section 122. So earlier section 122 only covered those persons who has committed such offense. So let's say there is a taxpayer, Mr. A. He issued some invoices to Mr. B, but there was no corresponding supply of goods. So it was a fake invoice. And there was some intermediary who facilitated such transaction and took some amount as commission from either Mr. A or Mr. B for facilitating such transaction. So earlier, this intermediary, let's say his name was Mr. C, such intermediary, Mr. C, was not covered under section 122. So such intermediary was not liable for any penalty under GST law. So Finance Act 2020 came out with an amendment and inserted another clause under section 122 stating that where any person at whose instance a transaction is conducted, so the person who has facilitated such transaction and retained benefit of such transaction, retained some part. It's not necessary that the person should retain the complete amount, but even if the person has retained a part of such part of the amount involved, then the person is liable for 100% penalty. So even if, let's say, Mr. C only retained 10% of the amount involved or 10% of the tax amount involved as his commission, but under section 122, Mr. C is liable for 100% penalty, equivalent to 100% tax amount under section 122. And now after amendment under section 83, the property of Mr. C, bank account and other properties of Mr. C can also be attached for recovery of such tax amount and penalty. So as you can see, the government is coming down very heavily on any kind of fake invoicing. So, but in many cases, we have seen that genuine taxpayers also get covered, also get roped in such proceedings. So it is very important to keep track of all the legal provisions of all the judgments which are being pronounced, and to advise our clients accordingly, so that they can avoid unnecessary harassment at the end of the tax authorities. So that is all from my end. Thank you, everyone.
Follow? Moiji, there are certain questions for you.
Yes, Anilji.
Yes. First question is whether FIR required in arrest under GST?
No, FIR is not required. For the non-cognizable offences, FIR is required, but for cognizable offence, FIR is not required.
And what is the minimum amount in which it attract arrest?
Attract above 5 crores, the tax department can directly arrest. Between 2 to 5 crores, they have to first get court permission to arrest.
And what are the various circumstances that the arrest provisions of GST Act will apply?
So those 4 provisions which are given in section 132, subsection 1, clause A to clause D. Only in these 4 cases, arrest can be done.
In case of Nandini Satpathai, lawyer can accompany. Whether CA also be included?
So Nandini Satyapati was pronounced in a common criminal case. So in civil or criminal law, only lawyers are empowered. But in Pool Pandi, for fiscal laws, they said that lawyer or CA both cannot accompany the taxpayer.
Gee, absolutely. If we have issued e-way bill, but we entered wrongly origin place and the vehicle is caught by AC, so what should we do in this case? Please share your opinion.
So can you repeat the first line again?
If we have issued e-way bill, but entered wrong original place and the vehicle is caught by the assistant commissioner, so what should we do in this case?
So, in case of any discrepancy in e-way bill, the provisions are quite clear that you have to either pay the tax or deposit a bond of equivalent amount and then get the vehicle released, and after that you can ask the department to issue show cause notice and pursue those proceedings.
G. Whether information given in the summons to the tax authority can be reversed by client in court?
This is a very good question. So, in practically, we have seen in many cases where, under the threat of physical intimidation or other threats, the taxpayer is coerced to give a false statement, which is not correct. So, in these cases, as soon as the client has given such a statement and come back from the tax authorities, the client should submit a letter to the tax department stating that the statement was coerced and the client is retracting such a statement. So it is a settled law where any statement is retracted by the client, it is not admissible as evidence, but it should be done within a reasonable period of time.
Whether imprisonment can be done if tax amount is practically cannot be determined. If jail is happened, then whether bail can be claimed.
So imprisonment can only be done where the tax amount is more than 1 crore, 2 crores and 5 crores. So if the tax amount cannot be determined, then imprisonment is not possible. And grant of bail is up to the court. So district court and high court. So if you are imprisoned, you can approach the district court for bail. If the magistrate is satisfied, you will get the bail.
And last question is notices for personal appearance in this pandemic time. How far enforceable under GST Act?
So the tax authorities have also got internal instructions from the government that in these pandemic times, personal attendance is not forced. So if you have got any such notice, you can submit a letter saying, please, we are sick or we do not want to come in such circumstances. And tax department is also very accommodating in these times.
Thank you, sir. These were the various questions which you have very well explained. And your deliberation was also very good. Thank you so much on behalf of CMP of ICI. I extend my heartiest thanks to you for sparing your valuable time and sharing your knowledge with all of us in this GST and arrest in case of GST. We have gained a lot through your deliberation. Thank you, Punji. Thank you so much.
Thank you, Anilji, for your kind words.
Thank you. Namaste.